This is another excerpt from one of our CSI live Q&A sessions from last month. This one was special. As you probably know, we obviously do a lot of work around semiconductors and the electronics manufacturing supply chain, but we also address end markets that are beneficiaries of that most important of technologies. And every one of those end markets requires a different way to analyze the businesses and a different way to decide on whether or not you should include those businesses as part of your portfolio.
And healthcare or health stocks, biotech stocks are no different. You have to understand the business model, which is very different than, let's say, the semiconductor industry. We have a special guest that works in the industry and is a business owner in the industry to help us understand how to invest in healthcare.
Let's check it out.
We have a very special guest, our very own Brad Gibson, who's going to talk to us about investing in healthcare, which is really exciting to both of us. You can introduce yourself, Brad, and tell us a little bit about yourself and why we're talking about this, why it's important.
Sure. Yeah. Thanks for having me on. I'm Brad Gibson. I'm a pathologist in Kentucky. I've been practicing 7 years and one of the few remaining large private practices in America. And I became an owner / partner of the group about 4 years ago. And then I kind of moved into the treasurer role because I kind of like math and all that. And so we got really involved in the numbers and digging that out. I found some of the things to talk about today, but then I really started to understand U.S. healthcare. And then that directly translates into a lot of the companies that y'all talk about and why you would or maybe wouldn't want to invest in them.
Let's do it. Let's talk about it because it is important.
And the U.S. healthcare system is massive. Obviously, there's a lot of money to be had. There's a lot of money spent, but where is that money actually going? And what does that mean for us as an investor?
The United States spends so much money on healthcare without an increase in life expectancy that would be proportionate to what other countries experience. It's actually a 3-dimensional chart. If you zoom over it, it shows you the year. So yeah, we're kind of off the chart on how much money we spend per person without seeing that above 80-year lifespan, which is unfortunate. And then at the top there, there's all those gray lines. And the one that's on the absolute top, I'm sure everybody's curious, that's Japan. It actually is, at least to some degree, fixed one of the problems that I think is causing our problems in America. So there's a ton of money spent on healthcare. Healthcare spending as part of GDP, it's just going up and up. It's now at about 18%. It's tripled from the last 55 years. So is this bullish or bearish for healthcare? Probably both at the same time. You have to keep spending money on healthcare. And at the same time, there's a point where we can't keep spending money on healthcare. So it's going to be a perpetual push forward until all of a sudden it isn't, which I think will happen rapidly.
And just to put that number in context, U.S. GDP is roughly 20 trillion. So annual spending in the U.S. on healthcare is approaching 4 trillion a year.
Yeah, something like that. It's a lot. How much money we bring in at income taxes, isn't it? A little over 2 trillion.
Yeah.
Something like that. Yeah. And I saw a stat I didn't include here. Medicaid and Medicare make up 2/3 of healthcare spending, and the other third is private insurance. So yeah, it's in the multiple trillions.
And that's going to come in really important later in your discussion with that figure that you just said, that 2/3 of it is Medicare and Medicaid spending and 1/3 is private.
Yeah. And then what people spend out of their pockets personally, it's just separate from that. Why is everybody so sick? This is a terrible looking pyramid I made. That's just the summation of my thoughts on it. And the bottom of the pyramid is what influences health the most on a population basis. And then at the top is the things that impact it the least. So to me, relationships and a sense of purpose, which I think grow out of relationships, is the most foundational thing to health there is. If you ever studied child development or ever done foster care or anything like that, you'll see that a child's experience with people around them determines so much about their health. It doesn't matter if their food and environment is great and everything. If they experience what they call TAN, trauma, abuse, neglect, their health is just terrible. But it's also in adults. There's studies showing women that have great social relationships have better outcomes for breast cancer. Men who have closer relationships with their wives have better survival from cancer. I guess men's friends are kind of useless.
What's the moral of that story?
I don't know what that says for men, but what hurts relationships in America, talk about social media, really is amazing how much it damages people. The next level is really interesting. So I won't go through all these. I'll just briefly mention sunshine. Everybody knows you need it for vitamin D. That's how we're designed to get vitamin D. It's not really from diet. But also, sunshine releases nitric oxide in your vessels and relaxes them, so they're less likely to experience shear forces and get atherosclerosis, heart disease. So sunshine is super beneficial. Like, shockingly, food, and I think this is where America's really gone wrong, is our big agriculture has introduced just a lot of genetically modified stuffs, and it's shocking the things that can be added to our food that other countries don't necessarily allow. A lot of that is political and economic. I was even reading a very prestigious university's nutrition advice in prep for this, and they were talking about how seed oils are so good for you compared to animal products. I'm like, that's so obviously wrong, but it's highly political in America. I think maybe in Great Britain a little bit too. There was several studies out there showing that your consumption of ultra processed food, which is the food that's not recognizable anymore, super shelf stable foods, the more you eat of it, the shorter your lifespan is, just straight up. And I actually did inadvertently a small experiment on myself where I ate only whole foods or minimally processed, like cheese or sausage and stuff, for 3 weeks, and I dropped my cholesterol by 30%. It was so shocking that I thought the lab values were wrong. Until I'm like, nope, they're not. Then I found those papers. So yeah, I think food is the most easily fixable cause of poor health in America. And that new food pyramid, other than being upside down, it's so much better than the old one. At the top, it says eat real food. And that is exactly what Americans got to get back to. Water, sleep, exercise. And if you go to your doctor and ask for nutrition and exercise advice, you just shouldn't. They don't know that. Because other people know that kind of thing. But there's some really interesting things about exercise. That if you're pre-diabetic or you just became diabetic, there's a super specific form of exercise called HIIT, high intensity interval training, that it is so effective at ridding your liver of all the stored sugar in there. I won't go through the mechanism, but it's almost like magic. So there's some super targeted exercise you can do that doesn't take a lot of time to cure or alleviate some medical conditions. So hormones, there's just a lot of hormonally active substances in our environment, in our food, highly processed soybean oil and everything. There's some stuff in our water from birth control pills. The average testosterone level of men in the West is dropping by the decade, to the point where the average man in his 30s or 40s is just essentially deficient. The side effects of testosterone deficiency they overlap depression so closely. So a 29-year-old man that goes to his doctor and says, I'm feeling this and this, just can't sleep, and they'll get put on Zoloft. And really what they need is a shot of tea. So also true for women. There's a lot of misinformation about how harmful estrogen is because of some junk that a pharma company did. But bioequivalent estrogen, it doesn't carry those risks. There's just so much hormonal dysregulation in America. So preventative measures, vaccines, seatbelts, and all that stuff actually have made a pretty big difference in life expectancy for the positive. And then at the top are all the things that we actually think of as healthcare. Cancer treatments, radiation, chemo, all the chronic medications we're on, surgeries. I think if you really want to make the biggest impact for health, you don't make it in the medical community. You make it with regulating agriculture, in my opinion. So 2 questions from this to explain that terrible chart we saw. One, at what level of this pyramid does the modern medical services complex interact? And it doesn't really interact until kind of the preventative measures with maybe some vaccines and the top part of the pyramid. So we're spending money where the problems are occurring as opposed to fixing the problems where they're occurring. And the second question is, what can pharma offer us? Pharma is not authorized to patent bioequivalent molecules, things you find in food, naturally occurring compounds, naturally occurring DNA sequences. And so if pharma wants to sell you something, it can't be anything found in food, a supplement. If they try to make a hormonal product, they can't make bioequivalent hormones because they can't patent those. So what they do is they'll make artificial hormone-like substances like Depo-Provera, and those are not natural to the human body. So pharma can't actually hit the bottom of the pyramid either. So if you want to take care of your own health, just educate yourself on how all those things affect you. And there's not a lot of people who are financially incentivized to do deep research into this and make recommendations.
So it's also kind of an economic incentive issue to a large extent, maybe.
Yeah. I knew somebody who lived in Japan. They said the food production there is much more localized when they were there. I thought that was interesting that Japan's actually at the top of the list for dollars versus health. Probably we need more regulation in that area.
Yeah. so much goes into our daily lives that affects all of those things down there at the bottom that really inhibits us from fully realizing some of this stuff. There's so many socioeconomic issues with preventing health issues later on in life, education. It's an absolute mess. So we're talking about primarily everything above preventative measures at the very top. That's where all the money is.
We all think about investing in healthcare as a big stable thing because everybody needs it. I think it's actually helpful to break healthcare down into several different buckets and think, what bucket is this company in? And therefore, how does it act differently? So medical service providers is the first kind of bucket created. These are people that directly give something to patients. I'm going to give some examples of companies, by no means comprehensive. They're publicly traded. Surgery Partners is exactly what it sounds like, a surgery group. Encompass does inpatient rehab. DaVita has been mentioned in the Discord. That's a dialysis company. Natera and Guardant are two genetic testing companies. So the lab fits in with all these people. Genetic test, it's part of the lab. And so they're all treated the same. TransMedics, it's kind of a hybrid company, really, but they do help with organ transplant. They can transfer the organ. So let's look at DaVita as a way to kind of understand this. Now, before COVID, they got kind of a hit because, morbidly enough, some of their patients died after the pandemic because they were older and a little sicker. But you can see that they're not growing that quickly. They have a small but decent operating margin, and then the green is their debt. So they're kind of flat and stable. And what they do is they provide these outpatient, mainly dialysis centers, and they just manage people their whole life there. Dialysis is covered under what's called Medicaid in America. So our national health insurance has two parts: Medicare, which is for older people, and then if anybody is disabled or meets a certain condition, or their child with a certain condition, they'll get put on Medicaid, which sounds like Medicare. There's a piece of legislation that said all chronic kidney disease that goes in dialysis is going to be treated by Medicaid. And so that's the majority of their business. When it's somebody that's younger gets chronic kidney disease, it takes about 30 months to transfer them from private insurance to Medicaid. And during that time, DaVita has this ability to tell insurance companies, you need to pay us a healthy amount. And so they get about 3 or 4 times what Medicaid will pay. That's responsible for essentially 100% of their operating profit. This was on fiscal.ai from Morningstar. One of the risks here is if Medicaid reimbursements rates don't increase substantially, it would be a risk to the company. Okay, so here's a horrible looking table that's going to illustrate this. And the way that the medical services are paid in America is they're all turned into a code called a CPT code. Each CPT code is worth a certain number of what's called RVUs, relative value units. It's just a way of putting a number. So you have a surgery here and a CBC here and all that sort of stuff. They're each given a number of RVUs, and then there's a certain amount of money they pay per RVU. This is called the conversion factor. And so you can just look at the conversion factor as a surrogate for how much are they paying for medical services. In 1992, they started off paying $31. In 2025, they paid $32.34.
So the cost of actual service is increasing, but what is actually being reimbursed is decreasing, either staying flat or decreasing.
Yeah. I thought, how bad is this inflation? So I pulled inflation data and made this table or chart. So you can see inflation up to 2025 when I ended it was up over 120% higher than it was when all this started. So you're paying over double for your staff, your supplies, and actually there's a separate thing called a medical inflation index that outpaces regular US inflation, sadly. And so if you started your career in the 90s and you ended in 2020 and had a 30-year career, at the end of it, you have to do at minimum double the work to get the same number of flat dollars. Forget about inflation. So if you're living off of this, you're constantly being efficient and you're in trouble. Every 2 years, CMS releases this practice survey evaluation to see how bad things are. And every 2 years, they report that an increasing number of doctors are working for a hospital, working for larger groups, and they're consolidating. But this is not an organic consolidation. It's a forced consolidation from a lack of inflationary update from government.
Yeah, you can't survive.
They can't survive. So why are they working for hospitals? Hospitals can afford a lot of lobbyists and have been to DC and told them, hey, we can't continue to operate on these numbers. Private insurers, when you sign up for them, make a contract, they typically, vast majority of the time, pay you above 100% of CMS for the same code. Hospitals, probably 200%. So they charge double what Medicaid would pay. And so hospitals that went to DC and said, look, we're getting paid double for this surgery, what you would pay us. We're a hospital after all. Do you want hospitals to close? And so a lot of states have what's called state directed payments, state directed reimbursement, where they will send state tax dollars back to the hospitals to make up for about half that difference. And then that turned into a federally funded subsidy, but only for hospitals. And that's been in the news over this last year in the US. What's happening is they're trying to cut down on those state directed payments. In my own state, all this is publicly available. You can look it up. They've directed something like $2.4 billion a year to hospitals. So you have the major universities raking in hundreds of millions of dollars extra just for being a hospital. So if you're a medical provider down the street, single person provider, you just can't make it. And you're like, man, I'm doing more work every year, but I'm making less money. So what do? You just go to the local university, and all of a sudden, for the same amount of work, you're getting paid more. Hospitals are padded. So this will continue. But then what? Okay, what about when all the private practices are done and everybody's working for a giant group or hospital? What about when inflation catches up with them? Everybody's talking about an AI bubble, but I'm really worried about the healthcare bubble. When the AI bubble or bubble-like feature bursts, we're just going to have a little extra infrastructure and some investors are going to be hurting, maybe. But when the healthcare bubble bursts, what's on the other side of that? I don't know how many senators and congressmen understand this. So that was DaVita. What happens when your company is reliant on CMS, Center for Medicaid and Medicare Service Reimbursement? It's kind of flattish growth. This is Natera, and they do peripheral blood genetic testing and some other things. They have a mix of private insurance and government insurance. You can see they're actually growing, but then not turning profitable. If you look at their payer or where their income comes from, it's the vast majority is insurance. They don't have a lot of contracts with Pharma for their data. I don't know if they publish this so much, but around half and half. So here you have a company that gets a better reimbursement, and look, they're actually able to grow. Look at a third company for comparison, TransMedics. TransMedics has two arms. They have the actual medical hardware to preserve an organ, and then the service of transporting that organ with their team. They started off with the hardware, so they kind of fit into the fourth type of company we'll look at. But you can see they're actually able to grow and are profitable and build cash. Look at the difference it makes when you're actually able to get paid cash versus part government insurance versus complete government insurance. And the reason they're paid cash is because a transplant center, they're willing to pay them a little extra money to make sure that the organ transplant works, that there's not as much ICU time, so they can actually kind of engage with hospitals and transplant centers in a way that's like free market dynamic to compete, service, and get reimbursed. If you're ever wanting to invest in a company that provides a service, lab, surgery, or whatever, to the patients, the question you got to ask is, how are they getting paid? And just go to their segments and KPIs on fiscal and open your LLM and just ask, how are they paid? How much of this is Medicaid, Medicare? And that will inform a constraint on their growth. And remember, the lab and genetic testing is part of this bucket of people. These people largely just operate within the U.S. Even the genetic testing companies that could work elsewhere tend to just favor work in the U.S. to grow there. So also geographically constrained. This is just showing that a little under half of TransMedics is the medical service, and then the rest is actually the hardware. So that's the first bucket. The second bucket of investable companies, or publicly traded, is actual insurance companies. So there's a lot of insurance companies. Here are four of the big guys: United, CVS, Cigna, and Anthem. Anthem renamed themselves Elevance for a reason we'll talk about in a bit. And then Aetna does a lot of Medicaid management programs. So confusingly enough, there was this brilliant idea out of our Congress that private insurance companies should manage Medicaid at the state level, because the thought was that private companies do it better. The flaw in this thinking, of course, is you take away competition, the forces that can act there don't act. It's just Medicaid reimbursement. Insurance companies take in all this premium money, and there's a high degree of federal regulation about how much they have to actually spend. They can't just take half of it as profit. They can only keep 15 to 20% of your premium dollars as profit. And actually, they end up taking less than that. So where does all this money go? The biggest bucket is drugs, medications. So they're always wanting to increase that margin to make money. Mm-hmm. They can hide a little bit of money in here with quality improvement projects and administrative costs associated with that. So if an insurance company wanted to make more money, they'd have to do it outside of this allocation. And that's where you enter this concept of pharmacy benefit managers, PBM. So each large insurance company has a wholly owned subsidiary that just brings in drugs from all the places that manufacture them and gets contracts with them and then provides those to the insurance company. So United has Optum. They've really built that out, one of the largest. CVS is CVS Caremark, and Cigna has Express Scripts. Anthem, back in the, I think, 2010s, said, you know what, we'll just use somebody else's PBM. We just want to be an insurance company. And they got burned by that. So what happens is the pharmacy benefit manager is not regulated. Now they kind of are, but we're not regulated on cost. And so what would happen is a new drug comes out and they say this drug is great. List price is $1,000, what's called WAC, wholesale acquisition cost. Then CVS might say $1,000 is too much. And they say, okay, I'll tell you what, if you buy this big volume, we'll give you a $400 discount. And so CVS costs actually $600. When the patient goes up to the counter, it says this drug's $1,000 and your copay is whatever, 25%, there's $250. And then later on, CVS would get that rebate money. So that rebate money is hidden inside the PBM, wholly owned by the insurance company. And so there's a way that they can make dollars that's decoupled from cost. And then there's all sorts of stuff that goes on here. For example, somebody would come out and say, I'll give you a 50% rebate, but if you put my competitor's drug on your formulary, we're going to pull our rebates, which sounds like it should be illegal.
It's a horrible conflict of interest. Extreme.
Yeah, this is shocking. I didn't learn about this until our company entertained the idea of being partially self-funded in our insurance. And if you actually are integrated with your PBM, you can take the rebate. It's wild. So the formulary that these insurance companies make, what they do is they have a scientific team that sits over here and new drugs come in. They review them and say, yes, that's roughly equivalent, slightly worse, slightly better than whatever it's going in the formulary. Then they put that out. Then it goes through financial analysis. And if it's going to be the cheapest after the rebate, they'll put it in the top of the formulary. Though it's like there's a loose gatekeeper over here, and then everything else is determined by cost. So if you go from one insurance company to another insurance company, you might have to switch drugs because they got different deals in their rebates. That's how that happens. So then Medicaid, Medicare said, wait a second, you're taking our money. And then they came up and said, there's actually that rebate money has to be figured into everything. And they kind of cleaned that up a bit. And then PBM said, okay, fine. We're just going to charge an administrative fee that's based on the cost of the wholesale acquisition cost of the drug. Unfortunately, then Medicaid comes back and says, no, you're not, because then you're still incentivized to get the most expensive drugs. It's like a flat fee for Medicaid, Medicare. But if other commercial people are using the PBM and they do kind of cross over somewhat, then they'll still get hit with that fee. So your insurance company doesn't want to have high medical cost, but if you do have high medical cost for a company, they'll just raise your premium the next year. So they're loosely incentivized to have a low cost, but at the end of the day, they're still passing it on to you. As long as it goes up slow enough that people can stomach it, they're okay with high premiums.
Yeah, because it's impossible to not have insurance, really. If something terrible goes wrong, it's ending, financially ending, amongst other things.
Yeah, and another thing to know if you're not in America is in 2011 or 12, we had the Affordable Care Act, which says everybody has to have insurance. And if you don't, you're getting dinged in your taxes. So you have to issue this form with your taxes every year that shows that you are insured the whole year. So you have to buy these products. If you're going to invest in this area, a question you have to answer is, what about the regulatory risk? Because people complain, patients, companies complain. Those things go to senators. Senators regularly introduce legislation. They have the eye of the regulators on them. And that's a key risk for US-based insurance companies.
So this is why, for many years, a lot of investors are drawn to companies like this, UnitedHealthcare, because these stocks are the most stable compounders of profitability because of the various dynamics that you just described.
Yeah, it's easy to think of a medical insurance company as just providing medical insurance, just like a car insurance company provides car insurance, and then they get the math right, they make money. But that's not actually what insurance companies are anymore. And this is illustrated really well by the first one that began to vertically integrate, if you want to call it that, their services. This is United. The blue is their health insurance, how much money they made off premiums. UnitedHealthcare have their own PBM. That's in green. That's their pharmacy benefit manager. And then they have a couple other things in here. They have a data analytics thing. So when a little company, little hospital or whatever wants to submit claims to insurance, they have to have a software and data workflow network to do that. And so United realized that they could build that themselves. And then they have bolt-on acquisitions. They bought something called Change Healthcare a few years ago. The Department of Justice tried to stop that, and it ultimately did not. And they said if this has a glitch or a problem, it's going to affect a lot of Americans. And that's exactly what happened. Change Healthcare got hacked. You can go read about it. It was this big saga. And so about 40% of the medical charges in America flowing through the data network that United had could not go through, while United continued to collect premiums. It did put some small practices out of business, but that drew the scrutiny of regulators. And then the last thing they did is they directly employ physicians. They actually own whole medical complexes. So they vertically integrated where they're providing the insurance, looking at the fees, controlling what drugs, and then employ that doctor. They control just under 10% of the actual physician workforce in America. 90,000 doctors work for UnitedHealthcare. And other insurance companies do the same thing. They've kind of taken their cue from that. One of the other big ones employs 40,000. They kind of specialize. Some of them do telehealth and various things. So United tried to experiment with another way of making money, and that's by, instead of paying fee for service, pay for value. So they say within this system, we're going to insure this 500,000 people for X amount of money. And what happened here in 2025 is they got the math wrong. And so they went from making $7 billion to losing just under $1 billion when people use more medical services than they had calculated. So they're trying to get out of those contracts. So you can see that UnitedHealth has almost the whole stack of medical services. It's kind of shocking.
Yeah, seeing it like that, it is shocking. It's kind of disturbing.
I'm curious then, gone through a few of these different buckets of the healthcare industry. It's not super encouraging, but then the pharmaceutical companies, these companies, this is why everybody wants to land the next blockbuster drug then, right?
Yeah, so the third bucket is pharma companies. Here are some of the big pharma companies. Some of them do other things as well. Johnson & Johnson has some other things they sell. Roche makes a bunch of lab equipment. So some of them diversify. This is just a company, Eli Lilly. And the point I wanted to make here is they are not geographically bound. You make a drug, you sell it in the US, it gets through the FDA, which is our regulatory body for drug review, which is not entirely consistent. Sometimes things get through a lot easier than others. And so if you're betting on a drug getting through the FDA, that's not a certain thing, even if the drug might be good. But we desperately need those people to regulate what medications are coming out. So it gets through there, then they go to other countries and they have their own regulatory bodies. And so you can see Eli Lilly, they got mainly US exposure, but they're geographically diversified. So that's a relative strength. How do pharma companies make money? We kind of already talked about that. When they come up with a drug, they make contracts with the insurance companies, they get them on the formulary, and then get paid cash. Are they bound to CMS fee schedule? Absolutely not. They're actually able to negotiate their costs with insurance companies and then just get paid. It's a little bit more of a free market situation. And so if a drug's super helpful, they can charge a lot for it. When the drug that cures hepatitis C came out, the cost for that was in the high tens of thousands. Not because it cost them that to make it, but they said, hey, you use this once and you're done, and we spent a lot of money making it. End of story. One of the CSI holdings, Vertex Pharmaceuticals, made a cystic fibrosis treatment that was no equivalent in the market, and they were charging low hundreds of thousands for that. That drew some frustration from, I know, the British government and their health system. That's an ethical debate. If it took us 15 years to make it, is it okay to charge a lot and then fund future research? And kind of what Vertex does, they hit these little niche areas in hopes of being the only one in that area. So pharmaceutical companies are kind of what you would think they are. They make a drug, you sell it. And so you can do research in there to see if that's something you'd want. They have a lot more leeway in terms of pricing. Last company, and this is just what I called hardware and software for medical services. These are people that sell software or some kind of hardware to a hospital system or clinic or something, and then they charge cash, not bound by CMS. That government and private insurance doesn't affect this. These people can just say, here's our costs, and they have to compete on costs like a normal company. So Epic is a privately held electronic medical record system. It's getting a lot of popularity. Medtronic, Stryker, Intuitive Surgical all make equipment for surgeries. Veeva is the clinical research management system that integrates with electronic medical records. So there's just a lot of these out there. This is the Lab 7 Casey made from a presentation a few weeks ago. They do all sorts of things. Some of them also dip their toes into pharma. So this is going to be a much freer way to invest in the healthcare industry without that interference from the government payments. So there's two companies just to illustrate. The first one's Stryker. You can see they're geographically diversified. They can sell in other countries. Next one, Veeva, also can hit up other countries. You can spread your risk around. And so they have a little bit lesser strength to their growth. You can just read about those, ask Casey questions about those. But there's just a lot less risk to point out in these companies. And most of the companies that CSI points out for healthcare are in those last two buckets, especially hardware, software. Any other questions before I hop off?
Yeah, I have lots of questions. Thinking about it in terms of not just how much you could get paid, but how you get paid is super useful. Essentially, if we were to build out a new framework for investing in healthcare, it sounds to me like the very first thing we want to ask is not how much the company is getting paid or could get paid, but who is going to pay the bill.
Yeah, that's my first checklist thing. Even if the company's awesome, even if it does something unparalleled and I love it, and I even use it in our lab. So there are those healthcare providers I mentioned, the surgery and the rehab people. There are some publicly traded single specialty, large, hey, we've dominated this area, dialysis or whatever. But then there's all these multi-specialty groups, and those are generally not publicly traded. They're held by venture capitalists, and those venture capitalists will aggregate them together and then go sell them to insurance companies. So that's how a lot of these people end up working for an insurance company.
That sounds like a great idea.
It happened.
And
Yeah.
it seems like there's a fair amount of regulatory risk with just about anything that you've discussed here, Brad. Obviously, some forms of regulation moves a lot slower than others and is riskier than others. But that's one thing that stands out to me is especially some of the insurance companies. Hard questions have to be asked as inflation continues to grow. The chart that you showed us at the very beginning, life expectancy versus healthcare spending, actually, it's super disturbing. There has to be some hard questions that need asked to revamp, especially the U.S. healthcare system.
I'm going to ask a question that we get asked all the time. And we always say, well, how could we know that? We don't know the future. If you look at the U.S. monstrosity that is the healthcare system, what's the most vulnerable part of that maybe causes the bubble to pop? What's the pin that gets stuck into this thing and causes it to implode on itself? What do you think?
You run out of money. I don't know. We got an email last month that there's a 4.3% Medicaid cut going across our whole state, across the board, because they ran out of money for Medicaid. So, Mike, is this just a little fluctuation or is this actually the bubble?
It's a big cut, Brad. Over 4%.
Yeah. We did the math and we're like, we'll just deal with it, I guess. There was a report, maybe it's 2 years ago, it looked at the 130 or so hospitals in Kentucky and which of them make money just with insurance, which of them make money after insurance and state-directed payments. And then there's close to a third of the hospitals in Kentucky, which are smaller, that lose money even after the government subsidy. I guess the question is, what's the ceiling of GDP America is willing to pay for healthcare? Because if you look at that graph, it is kind of leveling off. Maybe that is the ceiling.
So I know Silicon Valley's solution to all of this is we just keep innovating. We keep coming up with new ideas and keep figuring out ways to drive down the cost. But obviously that's not keeping up with the rising costs because the US population, like most industrialized developed countries, the population is now aging at a pretty rapid pace. So is that the solution, or do we need to innovate faster? Do we cut regulations to allow that to happen?
I'm really a fan of regulations in this area. I think as I was reading about this, some of the things that we really would not like to happen were stopped by or minimized by regulation. We really just got to fix our agriculture. You should be able to just eat a cheeseburger, which is really, at the end of the day, just food, without getting fake preservatives and stuff in your food. I really think that's the biggest bang for the buck.
Eat more veggies.
Or beef that's been eating veggies.
We were talking about this because we have, especially with drug discovery, the possibility that AI will speed up drug discovery and clinical trials and all of this, et cetera. And Nick was asking me if I thought less regulation would help with that, getting more drugs across the finish line. And I think my answer was basically something that was similar to what you just said. This is the one area that we need some actual regulation. These are people's lives.
Well, we probably need more. Really, AI only speeds up the discovery, but you still have to go through all the clinical trials.
Yeah, the trials.
Which is a lot of the money. And so I don't think it's going to be this huge boon to drug discovery. I think it's going to be a minor help, which is great. But I don't think it's going to revolutionize that area.
That's interesting to think about, though, because through my limited scope, which usually is like we're talking to people that want to make money. AI is definitely going to be this massive boon to drug discovery and getting more treatments discovered and brought to market. So maybe we should question that narrative.
I think it's probably a true narrative, just maybe perhaps not to the degree we're guessing.
It's like a hallmark of all makeup projects, though, right? They always overpromise and then end up under-delivering.
Yeah.
That's the domain that we're in, and maybe we just need to temper those expectations at least.
Yeah, I will say I was super skeptical of healthcare because I work in it. But then after doing this presentation, I realized there's actually a lot of facets of the healthcare industry to look at, especially in hardware and software. There's so much out there. So you can almost make a list of interesting stuff, and something's always on sale or often on sale on that kind of a list. So you really could have some pretty wise investments in healthcare if you took a ton of time to understand it.
Yeah.
Well, I
Absolutely.
think that was extremely helpful. It's nice to hear it through this type of discussion and through your lens. Make sure you hit that subscribe button and have notifications enabled so that you actually get our videos in your feed here on YouTube. And check out chipstockinvestor.com. Our semi-insiders get weekly live events like this one every single week, as well as a growing number of tools for your analysis of companies in the healthcare field and, of course, in the semiconductor field as well.